Welcome to your daily 5 minutes market brief with JP Morgan and Luna. Today is August 19th, 2025. I am Luna.
I am JP Morgan.
And bonds, what happened there?
Well, bonds saw a bit of safe haven demand. Treasury prices nudged up. The 10-year yield hovered around 4.3%.
And still that inverted yield curve.
Still there. Yeah, it continues to reflect those expectations of Fed easing down the line. The U.S. dollar index was also pretty steady, sort of pausing after pulling back recently.
Okay. And commodities. Oil slipped a bit.
Yeah, crude prices dipped to about $62.30 a barrel. Seems like supply concerns eased off a little.
Anything specific driving that?
Well, maybe some diplomatic overtures mentioned in the Russia-Ukraine conflict, and also China seems to have some flexibility in its stockpiling right now.
Interesting. But gold went the other way.
It did. Gold rebounded from a 2-week low, up about 0.4%. Classic safe haven buying kicking in there.
So overall market sentiment, kind of neutral to cautious, low volatility.
Pretty much sums it up. Major cryptocurrencies were little changed, really just mirroring stocks and, like everything else, watching for Fed policy cues.
Okay, let's unpack some of the specifics. We had some, surprising economic data points, didn't we?
We certainly did. That U.S. homebuilder sentiment for August really stood out.
Yeah, it fell to 32, unexpectedly matching its lowest level since late 2022. What's driving that?
Well, builders are pointing fingers directly at high mortgage rates and just general economic uncertainty. And get this, 37% of them are actually cutting prices now.
Wow. By how much?
By about 5% on average. And they're throwing in sales incentives, too.
So what's fascinating here is how this points to, a cooling housing market, right?
Absolutely. And this weakness, it directly bolsters the case for the Federal Reserve to cut rates, to lower those mortgage costs. Housing is such a bellwether for consumer health overall.
Makes sense. Now, shifting globally, trade figures caught my eye.
What did you see?
Well, the Eurozone's international trade surplus, it narrowed really sharply, down to $7 billion from over $20 billion just a year earlier in June.
Yeah, that's significant.
Yeah.
And did you see Singapore's numbers?
I did. Non-oil domestic exports fell 4.6% year on year in July. That was a sharper drop than analysts expected.
Right. And if you connect these dots, it kind of suggests Europe's export engine is losing some steam.
And broader global demand, too, maybe, especially for things like electronics.
Exactly. Tech components, electronics. Demand seems to be softening there. This could put pressure on those export-heavy sectors. And indirectly, it might influence central banks towards, keeping policies a bit easier for longer.
Okay, now for the macro front. This North Korea news seemed to cause a stir.
Oh, definitely. Geopolitically, that was significant. Kim Jong-un urging a rapid expansion of the country's nuclear arsenal. That kind of rhetoric always gets attention.
And the market reaction.
Immediate. You saw boosts for traditional safe havens, gold, obviously, but also defense sector stocks. And U.S. Treasury yields dipped on that news.
Interesting. What about crypto in that moment? Did Bitcoin act like digital gold?
Not really. That's the interesting part. Unlike gold, major cryptocurrencies basically traded in line with other risk assets. They dipped initially on that risk-off move.
So still seen largely as a risk asset then, not quite a geopolitical hedge yet.
Seems that way, yes. At least not in these immediate knee-jerk situations. It didn't decouple like gold did.
Got it. And then there was that massive jolt in the commodity world, lithium.
Yeah, that was big news. A major lithium mining project in China, operated by CATL, they're the world's largest EV battery maker. It got suspended.
Why? What happened?
Its operating license expired. And this isn't a small mine. It produces something like 3 to 5% of the global lithium supply.
Wow. Okay, so the impact must have been immediate.
Absolutely. Lithium carbonate futures on the Guangzhou exchange, they jumped the 8% daily limit. Lithium mining stocks soared everywhere.
But what about the other side, like EV manufacturers, Tesla, GM?
Well, for them, it just means higher raw material costs. That could potentially squeeze their profit margins, right?
Yeah. It's a stark reminder, isn't it, how regulatory actions in one place can just ripple through supply chains and entire industries.
Totally. Highlights those potential bottlenecks.
And one final point from yesterday. Signs of strain seem to be mounting in Hong Kong's property sector.
Yes, that's worth watching. Local real estate developers there, they're facing a huge jump, nearly 70% in debt maturities coming due in 2026.
How much are we talking?
About $7.1 billion. And this is happening as property values there have already plunged, over 50% since 2019.
So obviously a direct impact on credit and real estate in Asia. Any wider ripples?
Well, indirectly, it just adds to that general global risk-off sentiment. Investors start demanding higher yields for riskier borrowers everywhere. It does raise questions about potential contagion.
Definitely something to keep an eye on. So let's look ahead. What does all this mean for tomorrow, August 20th?
Okay, the main event tomorrow will be the FOMC meeting minutes. Those are from the Fed's late July policy meeting, and they drop at 2:00 p.m. Eastern Time.
Right. And the market's pretty convinced the Fed will cut rates in September, isn't it?
Oh, yeah. Futures are pricing in nearly 100% odds of a cut. So these minutes are crucial. They'll reveal if a majority of Fed officials were already leaning that way back in July, or if there was maybe more hesitation than the market thinks.
And the potential reaction.
Well, if the minutes sound dovish, leaning towards cuts, expect bond yields to fall, stocks could get a boost, maybe crypto lifts too.
Yeah.
But if the tone is less dovish, more cautious, that could reprice markets pretty quickly. You'd likely see yields move higher and equities pull back.
Okay, noted. Anything else on the radar for tomorrow?
Yeah, also keep an eye on the Philadelphia Fed non-manufacturing business outlook. That's out earlier, 8:30 a.m. Eastern. Gives a regional read on the services sector.
Good to know. So just to wrap up then, yesterday's market action, it really reflected this delicate balance, right? Underlying strength, but also quite a bit of cautious sentiment.
Exactly. Investors are navigating these mixed data points, global headlines. It's tricky.
So the key takeaway for listeners?
I'd say it's crucial to stay informed, obviously, but also stay nimble. Make sure your portfolio is diversified enough to handle potential surprises, and keep a really close eye on those interest rates and policy signals. They're driving so much right now, both on Wall Street and in the crypto world too.
Absolutely. And always try to maintain that long-term perspective amidst all the day-to-day noise.
Right. And maybe a final thought to consider. Think about how these unexpected supply disruptions, like that lithium mine halt we talked about, or those regional credit stresses emerging in Hong Kong, how quickly they can ripple through whole industries and investment themes. Maybe ask yourself, what other sort of hidden supply chain risks or financial vulnerabilities might be lurking in your own portfolio that maybe you haven't fully considered?
You've seen the headlines, but what really moves your portfolio? Money.ai scans 1.3 million signals a day, earnings, sentiment, macro shifts, and turns it into one personalized briefing focused on your holdings. No noise, no guesswork, just what matters. Money.ai, know what moves your money.